2014 was a great year for the markets in which NZX operates. In the capital markets in New Zealand, we had 16 listings. We raised more than $500 million to expand those businesses, and the market cap to GDP ratio was up from 38 to 42%. In the agribusiness, while dairy prices declined quite sharply, volume increases and price increases in other sectors mean that that part of the economy had a terrific year. And the fund management business as a whole in New Zealand grew by 15.1% in terms of funds under management, approaching nearly 100 billion under management overall. In that context, 2014 was a good year for NZX's businesses. Capital raising in the capital markets was down by about 40%, as was value traded, but that merely reflects the fact that in 2013 we had some significant listings, including Meridian, Mighty River Power and Z Energy, which generated a lot of trading activity which was not replicated in 2014. Despite that, all of our line items were up in terms of revenues in those businesses, and we had a particularly strong year in securities data, which was up almost 16%. Dairy derivatives benefited from the volatility in prices, with lots traded up 175%, and a lot of interest from Asian markets, in particular China, in trading our market. Similarly, agricultural information was up by about 8.1%, reflecting the strength in the agricultural sector in general. Units on issue in our fund management business, Smart Shares, were up over 10%, reflecting good growth in that business. However, after a careful review of what's required to accelerate growth in the ETF market in New Zealand, NZX acquired Superlife at the end of 2014. We'll use this business to accelerate the growth of ETFs in New Zealand. It's an important part of the product offering for retail investors globally, offering simple, transparent and cost-effective products to enable them to build a diverse portfolio. And it's also good for our market. It improves liquidity and, most importantly, broadens the range of products that are able to be traded on NZX. Over the past couple of years, we've invested heavily in building a foundation for future growth. 2014 demonstrated the growth potential across all three markets in which we operate: the capital markets, agriculture and funds management. 2015 is about us executing against those immediate opportunities. While we'll continue to make some small selected investments, our focus will very much be on converting the opportunities we have. In particular, growing the Smart Shares business and working out how we can better serve the agricultural sector through providing high quality data and information. And we're looking forward to the launch of Next, a new market for small, high growth companies, which we think will have a tremendous benefit for both those companies and for the market as a whole.